Hello, everyone. Welcome to Property Zone Live again. Okay, Sean Lee here. I'm an investment strategist, and today I want to share with you an event that have shocked the whole financial world. Just happened a couple weeks ago. Uh, I'm sure many of you have heard it, but for those of you who haven't, let me just share with you again. For those of you who have heard it or seen it, just treat it as a review of what has been going on then and the latest development now. Some of you may know that I was actually a US stockbroker in California back in many years ago. So I want to share with you these events from three perspectives. Of course, the first was the trading mechanism from a financial investment product point of view, like naked short selling, short squeeze, or what are the things that happening then, so that we can have a clear picture of what was going on for the whole event. So it's from the investment perspective to understand the event about the GME, the GameStop. Okay. The second was to understand the latest development. Now, why we decide to do this later, not then? Because sometimes we will tend to get clearer and also a more holistic pictures, right? If we don't stand too close to the event, or we let the dust to settle. I mean, after the certain times, it allow us some horizon, some margin, some room to see the event in a more holistic and a better perspective. Right? So this happened a couple of weeks ago. The third is, I think many of us are investor. All right. Although this session is mostly for property, I think it doesn't hurt, and actually we can get something from this event if you look at uh, uh, this whole event from what we as an investor can learn from it. All right. So without further ado, let me just unfold or rewind or recap the whole story again. Okay. It happens around a stock called GameStop, a company called GameStop and listed in US. Okay, it's a listed company, but the company has not been performing well because the nature of the business is uh, leasing, renting an online physical game in the shop. As you know, due to COVID-19 and due to the trending of technology, right? More people willing to download games online, right? The trouble of going to the physical shop, renting it, and then returning when the time is due is no longer feasible. So in this, some of the hedge fund are holding a negative or bearish view of this company nature. So what they do, they are short selling the company share. Now, what's short selling? How to make money in stock market or share market is basically we make profit out of the price difference. For the general people, we invest in a stock, for example, in 10 US dollar, because we're talking about US now, I'm just use USD as a currency. So if we invest in a stock uh, for 10 US dollar, if the share price go up to $13, right, then you make a profit in the price difference, which is $3, 30% gain. That's pretty good. But there's another play, is more for complicated professional. They carry a longer risk, a higher risk is short selling. That means that instead of buying first, I'm actually selling first by holding the view that the share price will come down in the foreseeable futures. So if I sell the stock now, okay, and later the price dropped to $7, okay, I buy it back at $7. I also make the profit at $3. Okay, so same theory, I make profit out of the price differences, just that the sequence is different. Now, what happened during that time, whereby a lot of hedge funds are holding a negative view and short selling the stock of GME? There are a group of people putting into their view into a social media platform called Reddit. I think many people have heard about this already. So what they are saying that they're knowing the fact that a lot of hedge fund managers or company hedge fund are short selling the stock. They want to teach them a lesson. So people just come in, they rally their support and keep buying the stock from less than $20 in December. The share price of GME has shot up at one time to the highest price of 483 US dollar. This, of course, have caused losses in billions for many hedge funds, mainly Melvin. The hedge fund name is called Melvin Capital, and also Citron. So they are bleeding. They have no choice. They have to cut loss, and then billion has been lost. So this was treated as a win from a retailer point of view, because retailer versus big institution like hedge fund, hardly they can win. But in this time, they actually won the battle. So they caused this particular two hedge fund manager bleed. They lost billions. So if you look at the events, we want to share with you. I want to share with you something is that sometimes things may not be as simple as it's seen on the surface. Even though this event is treated as retailer versus institution, but we understand that there are actually some wolf hiding among the sheep. That means they are actually a big player, sophisticated institution player, blend into the Reddit to become a retailer. Then actually they are rallying the buying spree to push the share price of GME goes up. Okay, so it may not be as simple as it. And this one is further illustrated. There was even one time after GME or AMC, there's another stock. Okay, they actually move on to silver. Why silver? They actually know that some of the hedge funds are holding a short position on silver, and they want to push the price of silver to goes up, and then to cause a loss for the hedge fund as well. Why silver? Because first of all, has not been performing, and the circulation, the market cap of silver is a lot lower than gold, and therefore is easier to move the price. Okay, but the contract they have shown in the silver, where people are buying, because when you want to buy silver or want to buy gold, there's so many ways to buy. You can buy the physical gold, you can buy a futures, you can buy a more complicated contracts. And what you know that the people rally behind inside the Reddit, and the contract they buy for silvers is not some ordinary people can buy, not even understand. So you can see the link between the pushing hand behind GME stock and silver. They are not just from retailer. They are not just from ordinary people. They are actually bigger shark. They are actually bigger players behind this, and it's not been seen on the surface level. Okay. The third is how we actually view this thing is many long ago. There are many revolutions that changed our humans' life. Of course, French Revolution, Industrial Revolution, and this time some of the people or some of the industry players in the financial world is treating this as a financial revolution. Why? Because last time the theory is the shark will always eat smaller fish. Shark perceived as a hedge fund manager. But now, through social media platform, all right, many smaller fish can actually group together, and they can pool together their resources, okay, and they coordinate the so-called attack, okay, or buying or selling activities at a certain point of time, and create the kind of impact that almost no hedge fund in the world can withstand. All right, so many of them took a lesson, knowing that retailers are no longer ordinary people like last time. Okay, because social media technology has changed the platform. What happened in these events during that time is after the GME stock prices has gone up almost an unstoppable trend in January, in the late January, US market indexes on, let me see the price, on 29th of January has dropped more than 2%. All right. It may seem insignificant, but we have to understand this is actually the biggest drop since October 2020. Right. Now, what has triggered this is that we have to understand butterfly effect. Butterfly effect is like one A and B, although doesn't seem correlated or is related, but whatever happened A can cause B to happen. So what happened is that when a hedge fund manager is being forced to close their position because they are bleeding, right? When they short a stock, if the stock price of that stock goes up, they lost money. So they have to cover their positions. So by cover the position requires cash, requires liquidity. So no choice, because hedge fund manager not only at any given point of time they are shorting some stock, they're also holding, longing some stock. Means that they are actually buying some stock. By having this liquidity crunch, they have no choice to sell some of the stock they are holding in order to cover their short positions. So by doing that, you see a lot of selling pressure in those long blue chips, high potential stock. And these are mostly index stock. So when they're selling on this, a lot of blue chips, a lot of stock that was included in the index have been sold off. That's why it caused the market to sell down on that day. So this event is actually very similar to at one time in April 2020, when it was almost at the peak of the COVID-19. All financial market comes down. Gold has been perceived as a safe haven during crisis time. But it took many by surprise. If you look back to the gold prices in April 2020, it did come down all together with the financial market stock uh, around the world. Why? They understand the reason behind, the mechanism behind is for any big fund manager, all right? They're holding stock, they are holding gold, for example, commodities. When they are losing money in one particular things, they need to cover their positions. Sometimes they have no choice to sell others' positions they are making money. For example, gold. So in this case, but the butterfly effect is the buying spree on GME has caused many hedge funds to sell their long positions in blue chips. So when the selling force is actually accumulated, it has made the market or indexes come down significantly at one given point of time, right? And why the retailer or the individual people can actually have such a powerful impact. And this also another reason when you look at it is actually very much to do with stimulation money. I think some of you remember that in fight with COVID-19, in fight with unemployment, government around the world, especially US, has given out so-called stimulation money or helicopter money per se, right? Each individual was given $600 at one point, and after President Joe Biden took over, he also signed an executive order to allow additional 1,400, so to make it total $2,000. So this little $2,000 grouped together through the coordination among the retailer become a very strong buying force, push up company like GME, GameStop, or AMC. Okay, so it has to do with stimulation money. When the money supply comes in, people have the money in hands. If they decide to invest, this will give them the bullet. The helicopter money, the stimulation money become the bullet. They can move financial markets. That's what they have witnessed counters like GME. All right. So I hope whatever I have explained, I've shared with you, many can understand. I think come back to the topic today that before I end the session is what we can really learn from this. I think through my years of experience and the first thing I learned as a stockbroker in US, one of my senior has mentioned to me, and I read it from books again and again, is never fall in love with your investment. This sounds like a word, it's a bit hard to comprehend, but maybe I can give you some example. How is this like this? You buy a stock at $10, all right? If it goes up to $15, let's say over 1 month, you're talking about 50% return in less than 1 month. Don't you love your investment? Don't you love the stock? All right. Imagine you did not sell and realize the profit. If the share prices come down below 10, comes down to 9, 8, because you already established that kind of emotional relationship with the stock, you would choose not to sell. And when the price comes down again, you hold on to it. And this is normally the times a lot of people lose money because they are not willing to cut loss. Okay, that's the first thing. But you look at to GME, the GameStop counters, instead of fall in love, they actually establish another emotion with their stock. The GME stock is called hatred. What they actually want to buy, although they are making money on a paper form, but the main reason so many people in this Reddit platform to buy the GME stock together is because they hate for hedge fund. They are discontent with hedge fund because they always see hedge fund as a voucher that always pick on the weak, pick on the normal people and make money and fatten their own wallet. So this is the view. So when you actually buy a stock and you hold on to it, the reason you buy is want to teach somebody a lesson because of the hate and discontent towards certain things. You sometimes become, in a way, I would treat it as a irrational. All right. Financial markets, emotion may happen at one time, but it always the rational and fundamentals will take over in the longer time. So what you have seen the stock price after they peak at 483, when the passion start dying, when people even inside the group start to lose that kind of momentum, people start selling, the price you can see is coming down from 483. It can drop 60% in one day. And no, now it's below 100 US dollar. And what you will see is that people who actually enter the game later, they buy at 200, 300 US dollar, right? Some of them lost their college fund. Some of them lost their lifetime saving, right? Because they believe the promise. People inside the Reddit is like a brotherhood. And once they buy, they will never sell. And in fact, in real world, this is not the case. Okay? So the lesson, the really, really true and most important lesson is never fall in love with your investment or never invest in anything with emotion. Okay? Always do your due diligence. Okay? Separate emotion from investment. Become a rational investor in any financial asset. Okay? With this, I end my sessions. Everybody, I wish you a good night. All right. I see you in the next section soon. Bye bye.